everyone. Welcome to Money Master Teachings TV. I'm delighted to be here today. My name is Debby Wetmore, and we're here to talk about the common mistakes that investors make. And I'm absolutely delighted to have with me Pauline Cronin. Pauline's a longtime friend. She's a chartered accountant and has a very distinguished career in the investment industry in Canada. And more recently, she worked for the Ombudsman for Banking Services and Investments, which is an organization in Canada that is sort of is it a last resort, Pauline, for investors to go to?
It's a last resort before the courts.
Before the courts, and they can then take complaints there, and then the Ombudsman office.
Yes. But they typically are complaints that the individual has tried to resolve with the financial institution and has not been able to resolve to their satisfaction. Mm-hmm. They can't bring the complaint before they've gone through all the proper channels first.
Okay.
They have to give the firm their best opportunity to resolve the complaint.
I see, before they come to the
Right.
Ombudsman's office. And you worked in that role with the Ombudsman's office after the stock market crash of 2008.
I did. I worked very shortly after the market crash when there was a glut of complaints.
Yeah.
And part of the reason is that when there's a problem in the markets, there's a tendency for issues of unsuitability, for example.
Yeah.
To emerge. Obviously nobody's going to notice that if the market's doing well.
Yeah.
Right?
Yeah, that's right. So these things, when the market is unstable, and particularly when it goes down, these issues are sort of exacerbated. And so and you did that for 2 years,
Yes.
Is that right?
And in fairness, I should also say that people become upset when they lose money.
Yeah.
So sometimes there's nothing wrong.
Yeah.
But people complain anyway.
Yes.
Because they lost money.
Yes, right. So in your experience then, what would you say would be the most common mistake that investors make?
Probably the root of a lot of problems is the fact that right at the beginning, the investor fails to adequately communicate their risk tolerance. They will be guided by questionnaires and by their investment advisor.
Yes.
To identify their risk tolerance. But in my experience, there's been a tendency for the average investor to overstate their risk tolerance.
In other words, they think they can handle more risk
Correct.
than they really can.
Yes.
And how does someone figure that out for themselves? Like, how would you know, or do you have any suggestions how people self-assess?
I think that people should ask themselves almost extreme questions. Mm-hmm. Sometimes when you're in a buoyant market, people are talking about 5, 7, 10, 12% returns, and that's what you want.
Yeah.
And you're quite excited at the prospect of it. But you don't ask yourself what would happen if it went down 10 or 12%.
Yeah. Or 20 or more.
Or yes, exactly. And how would I feel if I invested $10,000 today and it ended up being worth $6,000?
Yeah.
Like, am I okay with that? Like, how do I feel about it?
Yeah.
But there's also, can I afford it? Some people can afford a loss like that, and so therefore they can afford the risk.
Yes.
Some people can afford the risk, but they can never get over the loss.
Yeah.
And if they emotionally can't handle the loss, they should be moving down the risk curve to safer investments and lower returns.
I see. Okay, that's really helpful. And that actually leads me to another point that I think is really important, because you keep talking about how you would feel about a loss. And I think many people think when they're dealing with money that you can solve all the problems with your head.
Absolutely.
So it's a matter of, people have to be able to get in touch with their feelings, right? What does it feel like to lose money? And most people haven't had that experience, or don't even want to go there, because they don't want to experience what it feels like to
Right.
lose money.
Yeah, money is really an emotionally charged asset in your life.
Yeah,
And we're programmed to think that we should intellectualize about money.
yeah. Yes, yes.
But in fact, it's not just investments, it's even relationships. I mean, they get supercharged over money.
Yeah.
And it's very rarely anything to do with something that you could hammer out on paper.
Yes.
It's emotions.
It's emotions.
Yes. You know, some people need to have a lot more money in the bank to feel secure
Yes.
than the next person.
Yes.
You need to know that about yourself.
Yes. Good. Good. Well, that's really helpful. So we're going to move on to some other questions, but we're going to put an end at this point, and we'll come back with another question. So thank you all very much for listening, and we'll be back again soon.